So I told you I'd explain how basically I do restricted income. I don't use the journal entries that you're doing, and as you commented, there's a lot of complication in that method of trying to post it to the general ledger. I find it to be, frankly, a little silly. But so one of the things that we do in QuickBooks is we can create and track grants by using something called projects in QuickBooks Online. So just trust me that this is the way it works, and this is what it looks like. So I'm starting out with the Kellogg Foundation grant and the Hirsch Foundation grant. Basically, the reporting that you get starts out at all dates. So in January and February, the total income you received is $5,000. Total expenditures were $4,046. That left you with $953.90 unspent in this particular grant. For the Hirsch Foundation, $10,000 for the grants, the money that came in. You spent $9,800. You have $112 left. And you can see over here that I have put the totals in. Now, how does that play out? So we now know how much income you have, and we can break it out by month if we need to, because the standard reporting is all dates, but there's no reason we can't say, hey, give it to me for January or February or year to date or whatever. So I can break this down if I have to over here. Now, let's take a look at it in total. And I'm trying to use color coordination so you can see from where the numbers come and where they go. There are two financial statements that you have to worry about. That is your income statement broken down by with restrictions and without restrictions. And I just realized I misspelled restrictions here. My apologies. Okay, so the first thing we show is, and again, this is for your total organization. I made up this number, 125,000. But with restrictions, you have $15,000 for the period. One of the things that's happened, though, is that because you have satisfied the restrictions by spending the money for the appropriate purpose, you can now take $13,000 out of restricted and put it to unrestricted. That's the number that comes from here. And that, of course, is simply the total of what you spent in this grant for those two time frames. So here what you have then is a very easy way, without going through a bunch of journal entries, of identifying the income with restrictions and without restrictions. The other problem you have are net assets and restricted net assets. This is the way I like to construct the net asset portion of your balance sheet. I have it broken out between restricted net assets and unrestricted net assets, and then of course total net assets. Remember, the difference between restricted and unrestricted is simply an allocation that you are making between those two sections. So what I've done, let's start at the bottom. I made up this number. You can pretty much be sure that anything that isn't colored is a made up number. So I made up the number of $98,000. I said for the period, the change in net assets, which would be your net income for that period, is $25,000. But the adjustment to unrestricted net assets and moving it to restricted, you need $1,065.96, because that's the amount of money that you have not yet spent. So that money is still under restriction. And so then we have our restricted net asset side, and we've moved it up here. So I simply reduce the unrestricted, and I increase the restricted net assets that I've created. And again, this is simply a journal entry from one to the other. In this particular case, I added board restricted net assets because that could happen, and I wanted to make it a little more interesting. We might also talk about designated donations. That's a slightly different thing. But this gives you an idea of the way that I handle your net income with restrictions, net income where the restrictions have been satisfied, and then how you handle restricted net assets and unrestricted net assets. That's it.